All right, hello macro traders. Got a good video for you today. I think I'm out of coffee. Why all technical indicators are garbage. Yes, I'm speaking heresy. They're all crap. Well, I shouldn't say they're all crap. There are a couple useful use cases for a technical indicator. One is to measure volatility of the assets, so maybe like ATR or something like that, whatever your preferred measure of volatility is useful. Linear regression, it's not really a technical indicator, it's a statistical analysis. And again, sorry for not posting. I wanted to do more videos. I've just been very busy in my degree program, finishing up some advanced statistical studies, preparing for exams, etc. So I'm going to prove to you today that all indicators are crap, technical indicators. All right, so because we're going to make one. We're going to make one right now. And we're going to call it, I don't know, let's call it the most bestest indicator, I don't know, ever. That's how the kids talk these days, right? Most bestest indicator ever. Let's see. So let's create something. What should we do? Let's create an indicator. Let's code one. And by the way, guys, man, did you guys hear that? I got no internet right this moment. I think. Yeah, maybe I do. The squirrels like to chew on the transformers and where I live all the time, and they go boom. Sorry, I shouldn't laugh at that. We got squirrels in the yard. They're really cute. We like to feed them. We feed the birds. They eat the bird seed. All right. So my variable is let's take some random stuff. Let's take the close of 3 periods ago. We're gonna subtract that from the. Let's take the close of 10 periods ago. You know what? We'll multiply the whole thing by. What should we multiply the whole thing by? I don't know. The high of just 2 periods ago. And we use the high. So let's divide the whole calculation by the low of I don't know, five periods ago. Okay, random garbage. I'm just pulling crap out of my you know what. We'll multiply the whole thing by, I don't know, 9/5. 9/5, because that comes from a Celsius to Fahrenheit conversion formula. 9/5, it's used in that. So why not? Why the hell not? I'm sure it's useful for markets too. Let's just add it. Add 1.137 to the whole thing. All right. Can we agree? Random garbage. Because all technical indicators do the same thing. We'll plot, let's see, my var, and we'll color, I think it'll plot red, so let's just add that to chart. All right, and here it is, the most bestest indicator ever. Oh my goodness, guys, oh my goodness. Look at this oscillator, man. Yeah, definitely kind of an oscillator. Man, it's calling the tops, it's calling the bottoms, calling the tops. Whoa! When price goes up, no, you know, I should reverse that. When the indicator goes up, price is going up. Whoa, check that out, man. It's calling it. It is so spooky accurate. Look, up, down, price goes up and down and up and down and up and down. Oh man. Oh, and look at this. Look at this. Guys, I even got divergences. Oh, look at that. A bearish divergence. So you technical guys, you know what that means. Man, you see it in RSI, MACD all the time. Gold, man. Gold, like, I should say, and gals, like printing money out of an ATM, right? Bearish divergence. Lower high on the indicator with a higher high on price. Oh, price is going to tank and boom. Oh, look at that. Price just tanks. Oh, yeah. Hold on. Oh, here's an even better, look at it, even better example. Huge bearish divergence. Are you starting to see bearish and bullish divergences are a bunch of crap? Because this is random. This is random junk I threw into this indicator. I mean, there it is. Some random periods. You can make one yourself. Man, I should probably sell this. Higher high on the price, lower high on the indicator. Oh my goodness! Right here. All in, guys, all in short. It's saying it's a bearish divergence. It's going to go down. Boom! Boom. Like the squirrel that just chewed on the transformer. Boom. Oh, guys, I don't know what to tell you. Especially if you think this actually tells you something. This doesn't tell you anything. Honestly, you know what's interesting? Every time let's say you create a new indicator script on TradingView, which is a scam, by the way, guys. They charge you more than for like the Pro Premium package, the best one you can. Oh, is that another squirrel? Maybe they're just shooting shotguns. Oh no, it is. It's 4th of July tomorrow. I don't live in too dangerous of a neighborhood. They're shooting off fireworks. All right. So basically, they give you this as a default. They plot the close. That's a template. So let's do that. Overlay. Whoop. Overlay. What the heck is going on? Okay, overlay equals false, because we don't want to just overlay the close price with the close. Let's use it and look at it like it's like an RSI or some other crap you guys use. So we'll do it below and make it all fancy, so you have an indicator below. Add to chart. Oh my goodness, and we'll take away the most awesome best indicator ever and just plot the close price below. Oh my goodness. Now this one's spooky accurate. It exactly calls the highs and lows, but it's probably not even as good as the most awesome best indicator ever, because it doesn't have divergences, because it's obviously just a close price. But you get the idea. If you plot it below here, man, it's going up because it's price. Because it's price, guys. Any technical indicator, any calculation you do, mix it up, shake it up in a martini cup and whatever, it's just calculations off price. Understand that. You might as well just plot the close price, and hey, you can save chart space just by looking at price, guys. I hope you're getting what I'm telling you. So for staying with me through this video, I'm gonna give you I wouldn't call it a trade recommendation, disclaimer, do your research. This is not investment advice, but in Macro Trader, now the colored line is hard economic data, macro fundamental data. And oh man, look at this. When the actual data like unemployment and building permits and industrial production and services PMI and the diffusion indexes put out by the ISM, well, in the foreign sense, it would be the market PMIs, MARKIT, market PMIs. The economic data in the colored line goes up. The country's currency goes up. This is a direct relation here between New Zealand and Australia, a direct differential, comparing one versus the other. When it goes down, it goes down. Wow. Now that is something, because you can also get leading data, because the economy will tend to happen before the price moves. See that? Okay. It's the only way to forecast possible coming moves. And what I love is from time to time you really get a heavy lead time. That's what I look for. So you see the New Zealand economy versus the Australian economy directly is getting stronger. It's above the zero line, which you can see there, kind of overtaking it on this format. And you had time. And I've been in this trade. The problem is when you use just technicals alone, say New Zealand, Canada. See, I just drew this line today for this video to show you, hey, let's say you didn't see that break yet, and you're thinking, man, it's not breaking through. That resistance is going to hold. That's not necessarily true. If the fundamental bias was for Canada, then yeah, that would hold. But the problem is the fundamental bias was strongly in favor of New Zealand. So I was saying that this channel was going to hold, this regression channel, and in fact it stayed in the upper 2 standard deviations of the mean line. So I had a trade back here, and if you don't believe me, look at my past video. It's one of them. I showed you I was long here, and I explicitly said I was not concerned at all about this. During this, all this bouncy, I was not concerned at all about the resistance holding and seeing a significant reversal. And now we are broke through it. Take a look at that video. But Australian US dollar, what I love to see in the linear regressions is a strong bias for, say, like New Zealand, and the move hasn't caught up yet, and a confluence of linear regression channels. So this would be technically where you have a great entry, and I've been long this position for weeks now. This is a daily chart, weekly chart. So I've not long, short. I've been short, long New Zealand dollar, short Australian dollar weeks now. And so long as the fundamentals hold, hell, I could be in this trade adding to it till May of next year. Just keep selling rallies. I mean, how nice is that? You keep your pulse on macro trader and just, you got one trade. It's easy to keep track of. There you go, guys. All right. And macro trader has institutional positioning. Hell, I'm going to put dumb money too. I'm going to put, because I got smart money. I think one enhancement I'm going to put is the dumb money. But smart money, this is the Goldman Sachs, the JP Morgans, the hedge funds. They're required to post their positions. Now, yes, it's a week late, so it's better to look at the fundamentals, confirm it, and see where the institutions are. But God, how many times have we said, if I could only know what smart money is doing, I could trade better. Well, if you could only know what the fundamentals are doing, and you can know what the institutions are doing, you get to know what the central banks are doing. You get to know it all. It's so good. And lastly, United States is picking up against the Eurozone. So, what would you expect? A long bias. And this happened, the flip, it overtook back here in May. So you'd expect the long bias to be in the dollar's favor. And I was in way back here in, I wouldn't say way, but in May I started looking at that when MacroTrader started showing. So let's get this garbage indicator out of here because we don't need them. We've proved they're useless. Let's go back to the daily chart. And I drew this regression channel. Man, I draw them early. When I see the fundamentals, I draw them early. Adjust as I go, but it gives you a good idea. So basically we are long bias US dollar. I wouldn't be surprised to see it come down to, the 110 right there, 110, and then reevaluate. Okay, guys, sayonara. That means see ya in French, bitches.